Now let's do some examples of accounts payable transactions. For this example, we're going to ignore the revenue and accounts receivable accounts for Mary's mowing service. We will look only at repair expense, cash, and accounts payable. Now in this transaction, your business is going to be buying a service on account. So Mary's business, she has $50 of cash and needs to get her company's lawnmower repaired. In comes the mobile mower repair business. So the mower repair service agrees to repair Mary's mower and agrees to let Mary pay in the future. So Mary is not going to pay now. So the mower gets repaired and Mary gets an invoice, which is just a bill, saying she owes $30 for the repair. She will pay it later. So what does Mary record now? Is cash involved? No, she's going to pay it later, so cash is not involved. She's going to have to record some type of expense. It's probably going to be called repair expense or maybe maintenance expense. And she will need to write down that she owes accounts payable of $30. And in real world accounting, she's also going to include the name of the business that she owes the money to, but we're going to skip that for now. So Mary is going to record the amounts in repair expense and accounts payable. In the future, Mary's business must pay the repair business. That's why it's called a payable for Mary. So remember, accounts receivable, Mary would be receiving something in the future, but if she has accounts payable, that means she's going to be paying for something in the future. In this case, she's going to be paying her repair bill. Now, of course, the textbooks can't make it easy. They always use some tricky wording for buying on account. So instead of saying something nice and simple like, Mary gets her mower repaired and promises to pay later, the textbook homework will say something like, Mary had a mower repaired on account. So if it says she had something repaired on account, you need to know that that means she's going to pay later. So now let's talk about the mower repair business. So the repair service technician does not understand accounting. And why should he? His job is repairing mowers. He asks you, what will happen with his AR and AP? So the repair company's AR increases by $30 because in the future he's going to receive some money from Mary. So his AR goes up by $30. And he needs to record some type of revenue since he is done finishing repairing the mower. So he's probably going to be calling the revenue account repair revenue or maybe maintenance revenue, something like that. Repair revenue makes sense to me. So when Mary pays, what happens to her accounts payable? Remember, her accounts payable was $30. Well, when she pays it off, she no longer owes the $30, so Mary's accounts payable decreases by 30 down to 0. Now, let's get over to the repair technician. The repair technician asks you how the transaction affects his accounts receivable or accounts payable. Now remember, Mary just paid him. So what happens to his accounts? Well, his AR decreases by 30. So it goes from 30 down to 0. And what happens to his cash? His cash increases by $30. So basically he swapped out AR, accounts receivable, for cash. So let's get into some tricky wording about Mary paying off her bill. So the book could say something nice and simple like, Mary pays $30 to the repair shop to pay off Mary's account. But the textbook doesn't make it that simple. The authors will say something like, Mary paid $30 on account. So if we're doing the books for Mary, and the transaction said Mary paid $30 on account, this means Mary's cash decreases and accounts payable decreases because Mary's business no longer has to pay the $30. So here's a summary of accounts payable. Let's say a transaction says Mary's mowing service purchases a service on account. Because it says on account, that just means Mary will pay later. She gets the service now, but she promises to pay later. So on her business record, she would increase accounts payable since she now has debt. And she would need to record increase in some type of expense, such as mower repair expense. So remember rule number 1. A transaction must affect 2 or more accounts. So we got 2 accounts being affected, an increase in accounts payable and an increase in mower repair expense. And then later, if the transaction in the homework says Mary later pays on account, this means Mary paid her debt. So that means her accounts payable would be decreased. And because she's paying her debt, cash would also decrease.